year ago today, your price is about 3 times what it is today. There's a few things happen. Why don't you kind of talk us through that?
Right. Well, actually, if I may, I'll go back to the year before first.
Okay.
2017. So our first 15 months of operation, we were putting about $2 million into the bank every month. So we were running it as a business, making money. That was the philosophy. That's what we wanted to do. And then in 2018, we started hitting a bit of a wall, and we really struggled with the operations, and the grade dropped, and we were trying to figure out what it was. And ultimately, what it turned out to be is that the previous management had been essentially harvesting what Northern Star had left us, but not replacing it. So there was no ability, once we'd used up what was already planned out, with flexibility.
This must have been part of the data set which you inherited.
Yeah, it was, but of course you assume your management are replacing what they mine, but they weren't. So basically we had to pull everything apart last year and figure out what it took to do it. We changed over management, we put in more technical people, because
You've got a new COO?
Yeah, so that I would say that was the final piece of the puzzle.
Right.
Even with those changes, it still wasn't happening. So we sent Keith Boyle, who is now our CEO, down there for 3 months. So I said, look, tell me what's going on.
And what did you discover?
Well, first question I asked him was, is it the ore body? Because if it's the ore body, then you're right. It's all, game's over.
Yeah.
He said, categorically, he said, it's not the ore body. He said, you got the right people. He said, there's just needs to, you need to basically focus on basic operational things. It's absolutely fixable. And as a result of that, he spent 6 weeks of the 3 months, and he liked what he saw. So when I offered him the job, he'd done his due diligence and said, yeah, I want the job. So I think that's, really a testament to the asset.
Right.
And the deal is he's based out of Toronto, but for the next 6 months, he's living basically at site.
Right.
It's like he's not coming home until he's got it back on the track.
So let's come on to him specifically in a minute and get back to what he discovered or what he thinks he sees in this. He's looked at the operations. Your costs are quite high, but the AISC is quite high. Certainly the 2019 numbers look quite high. I mean, is he looking at optimizing that, or is that something you think that needs addressing, or is it something more fundamental than that?
In terms of the cost, it's all about grade. Because for the first 15 months, we were all running an AISC at about $1,000 US. So we were making 200 plus, $200 to $300 an ounce margin.
But it's still also, mid-level rather than.
Oh no, it's not. Look, it's not the cheapest mine, but it's not. It's not the most expensive.
Yeah.
But really, what drives it for us is our unit costs are already low.
Right.
So it's all about grade.
Right.
You get the grade back to where more like a 4 gram stope grade. That's when you're going to make money.
So tell me, when you say the unit cost, what do you mean by that?
Well, what it costs you to move a ton of rock.
Right.
We've got a very stable handle on those.
Right.
We've got them low. So what then drives it is, grams are you going to get per ton?
You can move volume of dirt
efficiently
with the equipment you've got. No need to change that. You just need to hit higher grade.
Correct.
Right, okay.
And if you look at the ore, but like I say, for the first 15 months, we had a good solid plan, and we were mining around 4 grams stope grade and making money.
Right.
When that plan, the long-term plan kind of evaporated, for want of a better word, we basically had to, they go to the easy stuff.
Right.
Which is like 2.5 to 3 grams.
Right.
And there's loads of that.
Right.
But it's not making you the money.
Right.
So basically, one of the first things Keith has done is he's gone and said, okay, let's put together a life of mine plan. Where are the gaps? So you actually now can, don't mine that grade, because that's going to make us money. So it all sounds probably very simple, but often these fixes are. You just need someone to come in with a fresh set of eyes and say,
right.
And I was just down there for 5 weeks. So between me and him, we were basically worrying everyone to death, just saying, look, this is what we got to do. Let's get back. And it's not like we've not done it. That's the point. It's not like we've had this for 2.5 years and we've never made it work. We did. We did make it work. We just have to go back to what we did.
Right.
And we're already beginning to see the changes. And it's simple.
So tell me about those. So you've made some quick fixes.
Yeah, well, quick fixes is really getting people focused on the plan and maximising grade.
What were they doing before?
Well, as I said, it was because I think they were so frantically trying to get stuff through the mill, they just go to the easy stuff.
Right.
So there never was that long-term planning going on. And so we've instituted that. For example, one of the things you want in an underground mine, you want 3 months of developed stopes laid out ahead of you. So if something goes wrong with your plan, you've got an option.
Yeah.
We didn't have that.
Right.
In the time Keith's been there, we've already gone from no stocks to a month's worth of stocks.
Okay.
So we're already seeing that change. And then we found out that, because they were being a bit, I guess, frantic with their efforts, they were diluting the ore, so that was part of that was amplifying the grade issue. So all these things we've been putting in place, and we're just basically forcing the guys to basically run to a higher standard.
Right, okay.
And I guess you'd always like to think that people just do that. And initially I kind of wanted to run the company lean, and for a single asset I was thinking, well, why do I need a COO? Well, it turns out, when things aren't working, you do need someone like that can step in and say, okay, this is what needs to be done. Right. And at some point when we've got this back on the track, we will be looking at other assets, and you need a COO for multiple assets.
Well, again, I'd love to come back to you on M&A as an option in a bit. So again, what are the other kind of quick fixes? He's looked at the plan. He said, here's what we need to focus on. Is there anything else that...
No, I mean, when you say it out loud, it always surprised me how sort of basic it sounds, but often things in life are like that. But it is all about having the plan, sticking to the plan, having the flexibility so if something doesn't work. So in other words, you say, okay, if this goes wrong, how are we getting it back on track?
Right. Any other new hires that you're thinking about, having learned that a COO is quite important to you?
Well, no, not really, because we've got all the people we need at site. I mean, Keith has made a difference, a big difference, no doubt about it. And and we're looking at the, what was I saying, the dilution. I mean, that's a big thing. But that really
dilution of?
Well, you've basically taken too much of the waste.
Got it.
So mining it more efficiently, so you actually mine to the grade you planned.
Right, okay.
Because that's, obviously if you've got a 5 gram stope planned and you dilute it to 2.5, you're not going to you might take more ounces out, but you're not going to make as much money.
So you haven't been sold a dud in the sense?
No, not at all. I mean, like I say, I think one of the things to remember is this is an asset that's always been in production.
Yep.
Some assets...
But have they mined the good stuff out of it, I guess, is the question people are asking.
They've mined the easy stuff,
yeah.
Right? But I think also part of the thesis was that we could make money with what we know is there, but there's something else there. I mean, I'm absolutely convinced of it. There's going to be another. It's a big system, so we will find more.
So what are you doing in terms of identifying this new system or potential new system?
Well, I think part of it is really pulling apart what the asset is. I mean, you've got a drill database that's all digitized, and if you were to drill those holes today, it would cost you $1 billion US. Right. So it's an incredible exploration tool.
Yeah.
So a big part is pulling that apart, figuring out.
And who's doing that?
We've got our geologists at site and consulting geologists, and we're probably going to give the database to. There's a group in Toronto called Goldspot.
Yeah.
And they do big data mining.
Yeah.
And I think ours is a big enough set that it'll probably be useful for that approach. So we're doing what we can because that absolutely is our best exploration tool.
Right. Yeah. And so let's talk about some of those longer term strategies. You mentioned M&A as a potential, but do you feel that you've got to kind of sweat this asset first, or can you concurrently look at potential M&A activity?
Well, you need the currency, right? And I mean, we're so beat up, we just don't have the wherewithal to look at things.
And that's how much cash have you got?
Well, we got 15 million US.
Right.
Our enterprise value is 20 million US. It's insane.
Yeah.
Right? So, I mean, the bet anyone would have to make is, okay, if you believe what I'm telling you, that the fix is there, we are so ridiculously cheap that it is a really good opportunity.
Yeah.
Right now, the market's pricing us as though we're going out of business, which just is not going to happen.
Right. Well, I guess that's why you're here today, to answer those questions about what the future looks like. So maybe talk to some of those things. So you're going to sweat the existing data and try and see what you've got there and optimize whatever, all that activity.
Right.
M&A, is that a realistic opportunity for you? You've got 50 million of cash, but I guess that's
15.
Yeah, 15. Yep. 15. Where I guess it's allocated towards current activities.
We're very focused on the asset. However, when people show us stuff, I mean, you've got to be pre-prepared. So you've got to learn about what's around so that when you are ready, you're ready in terms of your knowledge. Yeah. So we definitely look at things and turn stones over. But number one focus is the mine.
Great.
But absolutely, I mean, one of the things we learned from this, if we'd been a multi-asset company and we started hitting these issues, we could have pulled people from other operations to help us out.
Yeah.
So that has shown us, just from that point alone, it's you know, having multiple operations is a good thing.
Yeah. Okay.
And investors are obviously asking for it. They don't like, you know, you live and die by what happens at your one asset.
Yeah.
And investors generally get uncomfortable with that.
Would it make you nervous? I mean, given you say undervalued,
Mm-hmm.
there's a claim I think most people make, but
Everyone's like, if a CEO doesn't think his company's undervalued, he shouldn't get out of bed in the morning.
Exactly. So,
but we are.
You are undervalued, but you're the one.
Yeah.
Great.
Yeah.
Does it worry you or make you nervous about the cost of raising capital in this market with your current situation to do M&A activity? Or do you feel that you would look at, you know, optioning stuff, you know, deferred payments? I mean, how would you tackle an M&A?
Yeah, I mean, you're right. I mean, where we are right now, our cost of capital is high. But like I said, we're really viewing M&A more now because we just want to know what's out there. So that when we are in a position to do it, we've already done our background work. We've already talked to potential partners. But the first thing is we've got to get this sorted out, get the market believing it, get a share price that reflects it and allows us to actually go and do stuff.
Okay, great. So you're looking at optimizing the current processes, operations, hope for higher grades, being able to identify higher grades, reduce that AISC down, feel with this new COO you've got the right leader for the technical team in country, and we should be positive about the future. Is that,
correct?
Is that the message?
Yeah, absolutely. But yeah, it's totally focused on fixing the operation right now.
Perfect.